one of the pieces of low-hanging fruit in our industry is parking cash and making some money when we call it parking cash somewhere. So what do you do with amounts of money that you don't need right now that you can earn some money on? And you want it to be safe. Hi, I'm Bridget Sullivan Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Scherer. I've got a fee-only financial planning practice in Middleton, Wisconsin. And before we start talking about low-hanging fruit, I want to remind everybody to hit that subscribe button, right? That helps other people find this information on YouTube. And with that, I'm looking forward. I've had a couple of discussions recently with both friends and clients about this idea, and just like, what do you do these days? What are you telling folks? What are your top ideas?
Well, let's start with what's worst.
Yeah, okay, great.
Keeping your money in your checking account.
Yep.
Or probably most bank savings accounts. They earned like 0.01.
Yep.
And they play on the fact that even if you were good in math, you didn't like it,
Yeah, right.
And so they're playing at 0.01, and the general, like an internet savings account, we use Ally a lot, is paying, right, I just checked, the savings accounts are paying 4.2. Okay, so that's thousands of times better.
Yeah.
Thousands of times. Not 4 times better.
Right.
Even if it was 4 times better, it would be worth it. Okay, so you want to make sure you engage and get it into a decent savings account and get it out of your checking account. And again, this is money for your emergency fund. This isn't your operating account, like, I got to pay my mortgage out of this, I got to pay my bills out of this. That's not what we're talking about. We're talking about money that you're not going to need immediately.
Right.
So for your emergency fund, and then maybe just other money you don't know what you're doing with. I had a situation with one person I know that one of their parents just died, and they're just trying to sort it out and really overwhelmed. But it's like, okay, you have a pot of money, you'll figure out what you're going to do with it. Mm-hmm. Put it in one of these savings accounts. You'll earn money on it while you figure it out,
right.
And that's fine.
I'll tell you, it's such a refreshing thing for so many to be talking about where do we get interest, right? I mean, like for 20 years, there was no place. Everything is getting, everything is getting less than 1%. So like, oh, golly, it doesn't make much difference where you put this stuff. And I had a friend of mine who his mom had to move into a retirement community, so they sold mom's house, and they got like $500,000 as payout, and there were some things they had to do helping mom, and then some of that was going to go to him and his brother and all these sort of things. And like, what do you do with this sort of stuff, right? And the one big thing is don't leave it in the checking account. Right. And I just love and we've been having a lot of conversations with clients across the board on this, but it's sort of simple. Oh, I got savings account over at the credit union, these sorts of things. And you start taking a look at those interest rates. And if you don't pay attention, that's one of my big takeaways from our discussion already here in this short period of time, is pay attention. We haven't had to pay attention, like I said, for the better part of 2 decades, because nothing was paying much interest. Now, especially when you're talking about, hey, we got $500,000 from selling a house or from whatever, a life insurance settlement, just parking it someplace to earn some interest over time makes a ton of difference on things. And we don't often use or make quite as active as use of the high interest online accounts, but 4.2, right? It's a great thing. We typically will have folks buy Treasury Bills or things like that, or CDs.
Talk about that in a second.
Right.
So we're going to talk about what not to do first, and that's get your money out of the checking account.
Right.
That's number one.
Yeah.
Okay. So that's the big mistake. Okay, is like leaving it there, and so we want to make sure you avoid the big mistake. Now, where you put it, there's subtleties, but none of these you're going to make a big mistake on.
Yeah.
That's what I'm going to say. Is like there's going to be 2 factors that you're thinking about. One is safety and insurance amounts, and then the second you're going to want to think about is how long can I tie this up for some period of time, or do I not want to tie this up for some period of time? Okay, so let's start with the safe part. Okay, so we want to make sure if it's in a bank, it's FDIC insured, a bank or credit union or whatever. And so let's just brief fast FDIC rules. A joint account, how much insurance does that have on it?
Is it still $250 a piece and $500 total between the two?
Between the two. Okay, so you got $500.
I've always got to look those rules up.
Yeah, exactly. Yeah. So it's not, and even like during the last banking crisis, they suspended some rules. Right. So And that wasn't actually that big of a crisis, like in retrospect. So it's worth looking up. But if your account is over $250,000, it makes sense to just open another account.
Yep.
Or and you can
joint,
open it
right.
at the same bank.
Yeah.
That's okay. And so 250, you want to say, okay, I want to think about 250.
Yep.
And then so you want to keep track of 250, and so you might have two that are 250 each. That's fine. That's totally fine. Okay. And if it's like a savings account like Ally or at your credit union, you can take the money out. It's like available. So
Right.
again, if this is, I don't know what I'm doing with it, I just want to earn some money and not be dumb about it in the few months before I figure it out, then that's fine. You want to make sure that you're meeting the 250 rule, and then available, you can earn a little bit less interest because it's available. But again, 4% versus if you tie it up right now for a year, you can get over 5.
Yep.
Okay.
Yep.
So let's talk about tying it up.
Yep.
Now, the cool thing about when you tie it up is that you can have larger amounts. So you're not as worried about the 250. So that is CDs. Oh, CDs
That's
still
the
250.
FDIC, right?
CDs
Yep.
still
Yep.
250 because that's a bank instrument.
Yep.
But the treasuries, you can go over 250.
Right.
That's
Treasuries
unlimited.
backed by the government.
Backed
Yep.
by the government. Yeah. So again, you want T-bills.
Right.
Or in this
Treasury
situation,
bill,
we
right.
have treasury bills.
Yep,
Yeah.
yep.
So backed up by the government, and you can go up as high as you want on those. And
Right.
but they have a date on them, and they'll pay you 5% for a year, or 5 and some change. If you want longer bills, that's okay. If you want to tie it up for longer, same with CDs.
Right.
If you want to tie them up for longer, that's fine.
Right.
And in both of those cases, you can get your money out. It's not, but you won't get the same interest rate.
Right. Right.
It's not ideal, but it's not the end of the world.
Right. Kind of weirdly now, the longer you tie your money up, the less return you get on
Right,
it.
'cause
Right.
people
Usually it's the other
expect
direction. Yeah.
That interest rates will go down, but it's still pretty good. It's still
Right.
over 4 if you
Right.
tie your money up for as long as you want.
Right.
Basically,
Right.
yeah. So number one, and where do we get those?
Treasury bills.
T-bills we use.
I'm at
from.
Schwab usually.
Yeah.
Yep. Yep.
And
Just your
then-
brokerage firm will have those available typically.
And CDs, we buy those at Schwab too,
Yep,
actually.
yep, same
but
thing.
you can go to your local bank too.
Right.
It's kind of up to you.
Yep.
Yeah.
And there's the convenience factor too,
Right.
as we talk about some of these things. Where what's the? I was talking with my friend who sold the house for his folks or his mom, and it's like, listen, could we get a little bit higher if we went to even an online bank or a
Right.
broker thing, and how long are you gonna have this money there, and it's gonna an extra 0.5%. Not that it's nothing zero, but you go, listen, if I can walk down to the local bank, and in this case that was a priority for him. I just want it to be easy. There's some
Right.
value in those things, right? Rather than going online and doing this, it's know what the dollar amounts are.
Although the person I was talking to had the checking account at Bank of America, maybe I shouldn't say that, but I'm like, they're not paying you that much.
Right, right,
Get the money you want to park out of there.
Right,
You know,
right.
even though it's convenient, $100,000 is going to get you $4,200 in a year.
right, right.
That's worth it. For most people, that's worth it. That's worth the inconvenience of doing a little bit of online clicking.
And I love that idea of talking about what is the actual dollar amounts. Excuse me. If you have $10,000 and you're getting an
Right.
extra 1%, I mean, again, not nothing, but we're talking $100.
Right.
If you have $100,000, now it's $1,000. And at
Right.
some point, there's some benefit. If you have $500,000, suddenly you go, hey, wait a minute, 1/4 or 0.5% makes a difference
Right.
at that level, right? Whereas, again, for $5,000, not like you don't want to be smart with your $5,000, but the actual dollars that you make getting an extra 1% are much smaller.
Right.
So consider what are the numbers? It's the percentages are one thing, but then what does it mean in dollars, right?
Absolutely. So, and again, we're talking about your safety concerns and your convenience concerns.
Right.
But like figure out the dollars when you're thinking about convenience.
That's right. That's right.
Because like for $4,000, I'll go out of my way.
That's right.
you know.
That's right. Exactly. Right.
I'll spend an hour or
Right.
two if that's a very high paid $4,000. Yeah.
That's exactly right.
Yeah.
The other thing that we're using on those short term as opposed to the banks is, the really short term treasuries these days are paying in that 5% range. So we'll buy a 1 month treasury bill. It renews. You can sell at any point in time. And if we're getting around that 5%, that's sort of our alternative. But you got to go through the brokerage account. We got to use Schwab. I mean, there's some different factors that play into it. But
and you can use Treasury Direct, but neither of us do.
Yeah, that's a hassle.
So we don't really know too much about it. I think there's some people that they have their accounts at Vanguard and then they use Treasury Direct like crazy, and that's totally valid too.
Right. But again, for us anyway, it's going through Schwab, and I'm sure it's the same thing with Fidelity, Vanguard, the major. Right, you can go online and with the connections there. I mean, those are the types of things, and then the online banks. I know a lot of people use those things, but paying attention to what are you actually getting? It's surprising. You kind of look and go, oh, I've got it at the credit union. It's in a good spot, and you go, wait a minute, they're only paying 2%. I could be getting 4%. And I got $100,000 in there. Oh, that's material information, right? So
right, exactly. And I think with the Treasury Direct, one of my concerns about it is there a market for it if you want to sell? So if you do have a T-bill at Schwab, if you want to sell it, you can sell it, and you might not make as much money as you would if you don't sell it. If you just let it mature, but there's a ready market for this stuff. People want to buy it, so it's easy if you're at one of the it's easy if you're at one of the brokerage houses.
Yeah.
Seems like that's a great place to wrap up. I'm Bridget Sullivan Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Scherer. I've got a fee-only financial planning practice in Middleton, Wisconsin. Both Bridget and I are taking on new clients, but if you like what you hear on our show and are interested in finding an advisor in your area, we're both members of the Alliance of Comprehensive Planners, so you can check out acplanners.org to find an advisor in your area.
And if you haven't yet, please subscribe.